These talks are brought to you by Claritax Books and are proudly sponsored by Six Forward Capital Allowances.
Welcome back to our series of talks on capital allowances. Today I'm looking at the recent budget. Most of the talk will be concerned with annual investment allowances, but we'll also consider one other development at the end. The annual investment allowance, or AIA, is a sensible tax incentive that manages to offer both a measure of tax simplification and some real cash flow advantages. Many businesses enjoy immediate tax relief for most or all of their annual expenditure on plant or machinery, instead of having to spread the relief forwards over many years. Although certain assets are excluded from the regime, notably cars, AIAs are available for most expenditure, including the costs of both integral features and other property fixtures. We were expecting a development in the budget, and sure enough, the Chancellor announced that the maximum amount of AIA will be set at £200,000 from the start of next year, falling from the current temporary figure of £500,000. Transitional rules will apply, and these can be notoriously complicated. So let's look at an example. A company draws accounts up to the 31st of March 2016, which therefore covers the date from which the AIA falls, the 1st of January 2016. We're going to need to make two calculations. First, we have to compute the maximum AIA for the whole of the year to the 31st of March 2016. That year includes 9 months for which the maximum was £500,000 and 3 months for which it is £200,000. So we add 9/12 of £500,000 to 3/12 of £200,000, and this gives us a result of £425,000. This means that the maximum AIA that can be claimed for the year to the 31st of March 2016 can in no circumstances exceed £425,000. But that is not the end of the matter. The expenditure in the year to the 31st of March may of course have been incurred before or after the 1st of January 2016, or partly before and partly after. A further cap restricts the amount of AIA that can be claimed for expenditure incurred in the period from the 1st of January 2016, the date of change, to the 31st of March 2016, the end of the transitional chargeable period. For this period, the maximum AIAs that can be given are those that would be available for a notional shorter period running from the 1st of January to the 31st of March 2016. That notional 3-month period would have its AIA calculated as 3/12 of the new lower figure of £200,000, which gives an amount of just £50,000. So suppose a company buys plant and machinery, spending £80,000 in June 2015 and £400,000 in January 2016. We know that the total AIAs for the period cannot exceed £425,000, but the further restriction bites as well. There's no problem with the £80,000 of expenditure before the change, but we've seen that the maximum AIA for the first 3 months of 2016 is £50,000. So the overall AIA will be capped at just £130,000. The company may, in this case, wish to see if it can bring forward some of its expenditure into the latter part of 2015, as that could hugely increase the AIAs available. We'll return to annual investment allowances next week as part of a more general look at AIAs, writing down allowances, and first-year allowances. At the start, though, I mentioned one other budget development, and this concerns landlords of residential property. Allowances are not normally given for plant or machinery for use in a dwelling house, but a 10% wear and tear allowance is available instead. The wear and tear allowance is to be withdrawn from April 2016 to be replaced by a new relief allowing all residential landlords to deduct the actual costs of replacing furnishings. The government will publish a technical consultation shortly, and the plan is to legislate for the abolition of the wear and tear allowance in Finance Act 2016. Furnished holiday lettings, for which capital allowances are available, will remain unchanged. Thank you for watching. I'm Ray Chidell, author of Capital Allowances and of the A to Z of Plant and Machinery from Claritax Books. This talk was sponsored by Six Forward, an independent property tax consultancy working with accountants to enhance capital allowances for their clients.